Welcome to Investors Insights. Our topic today, expectations. I think you'll understand that topic as we go through all the details today in our vlog. My name's Greg Powell, President and CEO of Five Plan Partners, and I'm joined by my distinguished colleagues, Bobby Norman, Trey Booth, and Ty Miller. And we've just had an incredible discussion regarding portfolios and markets and economy. To some of you, that might seem very dull. To those on the screen, we like to nerd out and we get into it very much. Also, before we get into our information, to all our clients, I want to say this. This coming Tuesday, March 4th at 11:30 a.m., we're having lunch here, and we're also having our annual Investors Insights. This is a presentation of the four of us in which we talk about the economic data and things that we're seeing in the markets, and we're there to ask Q&A session as well for our clients, answer those questions. I also want to say this, for those clients that are out of town, we will be Zooming this meeting. So we would love for you to join us for March 4th. And on March 5th, starting around 4 p.m., we're having a session, and also there will be a dinner provided for that and the presentation. And again, you can Zoom in if you're out of town, whether you're a client that lives out of state or you're on a business trip or on vacation and you just want to hear what we're having to say of all the details, economic news, things that we're looking at as we move forward in this 2025 year. So with that said, our topic today was expectations. Bobby, I'd like to go to you first because we've got expectations in this economy across the board. There's a lot of news, information, some volatility, and so talk about that in relation to economic news.
Yeah, so with the volatility increasing and the market trading back last week, it seems like the bad news around the economy and geopolitical uncertainty is kind of taking over. And so when this happens, it's important that we look at everything. So today, I want to talk about the good news that we're seeing. And you can see in this first chart, there is a lot of positive news that the market has to build on. Top left, you can see that employment numbers continue to look strong. The top right chart, the industrial production has turned back higher. The bottom left there, personal income continues to grow, which boosts consumer spending. And the bottom right chart there, where we continue to see positive news from manufacturing as trade sales continue its upward trajectory. All are positive news. And then this next chart here, it's been good to see rates coming down. This should help a housing market that has been struggling for some time and will hopefully help with the peak housing season coming up a few months here. So there is still a lot of positive key indicators that show that the U.S. is not in a slowdown. So again, as always, we're analyzing the good and the bad here.
And news headlines are going to come out every day, in this economy. And so we want to keep people informed and understand what we're looking at, as I like to say, the news behind the headlines. And Trey, you brought up about earnings growth. Talk about that in relation to expectations.
Yeah, absolutely. Thanks, Greg. So yeah, we're not quite done, but with 96% of the S&P 500 companies having reported, we're pretty much done with earnings season for the fourth quarter, and the numbers are very strong. Earnings across the board were up 16.9%. Every sector except for energy had a positive growth rate in earnings. You can see here with the best being looks to be financials, and the lowest being energy, like I said. But so that 16.9% is strong, but it sounds like the CEOs really wanted to batten down expectations. It's very wise, especially for a CFO or CEO on an earnings call. What you want to do is you want to under-promise going forward so that when reality comes, you can then over-deliver. You don't want to say, all right, we just grew by double digits. We're going to do it again next year and the next, and then you come in short. And so they really tamped down expectations. The growth rate for 2025 now sits at 10.2%, still very strong earnings growth in the double digits, but that's 3% lower than it was just a few months ago. And that's because CEOs came out and kind of pushed down those expectations. Yes, we did great. Let's not expect that every quarter. And some of the things they use as reasons why, you can see on this chart, is they use tariffs really as a big scapegoat, a potential scapegoat. This is the number of mentions on earnings call of the word tariff. Just on a quick Bloomberg search, you can see that we're way past anything we hit back in 18 and 19. And so companies are reporting extremely strong numbers, but then they're also setting the stage of, this time may be different or lower, so that hopefully on the next time they came in, because that's all the big news is, once we get the results for the first quarter, they should come in stronger than expected. And so it's very good news all around, but some clearly trying to tamp down of expectations of this time may not be where we kind of build on it every quarter.
Right. And again, information that we're navigating and using as we're looking at our clients' financial blueprints, as well as navigating the portfolios and the markets. So is great insight there, Trey. And I'll reiterate again about our March 4th and March 5th events. If you'd like to attend, let us know. We'll get you hooked up with Zoom, or if you can be in person, let us know as soon as you can. March 4th is lunch, March 5th is dinner. But this is the kind of information that we will be sharing and connecting the dots in relation to those expectations. And Ty, you did a lot of dot connecting in our meeting. I really appreciate the way you tied some things together in regards to what Bobby and Trey said. So talk about GDP for a moment here and consumer sentiment and what we're seeing out there.
Thanks, Greg. Yeah, real GDP in Q4 was unrevised at a 2.3% annual rate, so a pretty strong quarter. Coming out of the end of the year there, the consumer was pretty strong, which is nice to see. However, what can be more important than looking in the past is, kind of forecasting, having expectations leading into the future. And so the Atlanta Fed GDP put out their estimate for next quarter and drastically, kind of change that. And so they were expecting roughly, 1.5%, 2% kind of real GDP growth. And they changed that to negative 1.5%, which is a big drop. And as you can see in this chart, they can be fairly accurate. There are times where they're not correct, but for the most part, they're fairly accurate. And so what kind of led to this, this change? Because that, it's a noticeable difference, and a negative real GDP gets a lot of headlines. Well, the thought is that they were expecting, as you can see here, the subcomponents, a big headwind on net exports. So the theory is that a lot of companies are trying to kind of front run tariffs. If they're going to come in, go ahead and start importing everything, things like that, and try to avoid any kind of tariff costs that may come in the future, and just hold the excess inventory if they need to for the time being, and front run as much as they can. Which, backs up their estimates here. But also, if you see the darker blue area, the navy blue, the consumer spending is also a little bit weaker. And so that kind of leads me to another point here of U.S. consumer confidence. As you see in this chart, U.S. consumer confidence is heading in the wrong direction. It is dropping. It was the biggest drop since 2021. As you can see in the chart next to it, consumer sentiment also, coming down. And so what's interesting is you have these consumer sentiment, you have the real GDP being revised down, but CEO confidence is rising. CEO confidence is at a 3-year high since Trump was in office. So it's kind of a dichotomy there of what everyone is talking about. And so it'll be interesting for us to keep an eye on, because, we have to keep an eye on expectations, and eventually they'll become reality.
Yeah, no, well said. Expectations becoming reality. I like the way you sum that up, Ty. It's one thing to track all the expectations. It's another thing to turn that into reality and results. And that's what we like to do here at File Plan Partners. And we're striving every day to see to it that our clients' lives are better, richer, fuller, not only in terms of their financial blueprint and their portfolios, but from a knowledge standpoint. And what you've gotten today is looking at those expectations, the knowledge, the amount of research that we look at, the details we go into, and the debate and discussion. You'll experience that even more if you join us on March 4th, 11:30 a.m. For lunch, or if you're Zooming in, love to see you. And March 5th for dinner starting at 4 p.m. And we'd love to Zoom in on that, or if you can be there in person. We always enjoy seeing everybody. We just celebrated our 20th anniversary, and it was a really special evening, as well as a week full of great memories, and looking forward to the next 20 years. Keep following us on social media, on Facebook, Twitter, LinkedIn, our podcast, YouTube. We're doing everything we can to get you information to keep you informed. Because guess what? As volatility or anxiety and these different things and headlines come out, we don't want you getting anxious over, well, how's that impact me? We're here to answer your questions. We hope you have a great week, and we're looking forward to keeping you updated. Thanks.